Hello traders, welcome to FreeFX. Today we're going to talk about a lot of things, so thanks very much for joining me. There's quite a lot to talk about today, so let's get started. Today obviously was the end of an interesting trading week, so I'd like to kind of get into that in a second. So just to kind of go back to the chart. So first of all, we're going to start with the S&P futures. And the S&P futures E-minis September contracts, there's quite a lot there to unpack, so I've actually loaded the chart with indicators and things because there is a fair bit to look at. So let's kind of unpack what we see here. First of all, what we have is the S&P 500 futures on the candlesticks. As you can see, this is a daily chart. Okay, so this was the move today. Quite a substantial move, and we got a lot of volume behind it, as you should be able to see from these bars. Now, if I could just show you these bars. So today's volume was 2.14 million, and I've put a moving average there on the volume bars. As you can see, the volume bars go back a fair bit, and if you look at something of equivalent size, you'll be able to find it on the 13th of July and back on the 30th of June. So nothing quite of a similar size for quite some time. That was really the importance of that. And I went actually back and checked these two dates, 13th of July and the 30th of June. Neither of these dates had anything particular happening. In fact, if I just show you that on here, you'll be able to see exactly what I mean. Here's the calendar for one of these dates. That was the 30th of June. As you can see, nothing of note, especially not for the US anyway. So you can see that there's really quite very little going on, except maybe just very early on in that day was a Chinese manufacturing PMI sort of in the Asian session, but really that was it. So sometimes, and that takes me back to the screen that you just saw there for a second, sometimes we get these sort of big volume moves, and obviously it doesn't always translate into a big price action move, and this is what the Wyckoff's 3 laws deal with. And if you've read Anna Coulling's book on volume, trading with volume in volume price analysis, which I recommend. So check out that link and see if you want to try this. And around a few minutes into the video, you will see the explanation of how the 3 laws work, and she sort of developed this sort of volume price analysis, VPA, based on that. And essentially, this is kind of going back to what I was saying in the previous chart, so let's go back to that. So big volume those days, and you can see, if we go back to one of them, the 30th of June, the candle there was very, very small. And if I just make that a little bit bigger so you can see better what I'm trying to say. Very small candle there, big volume, small candle. And then if you go to the 13th of July, again, big wick up and big wick down. So when you have that sort of volume but price doesn't confirm, or vice versa, then there's a bit of a struggle. In fact, the following day saw another struggle there, and then with lower volume actually we started moving up subsequently. But if you look at the moving average, we're still below that average, and above average moves you can see are quite few and far between. Today was one of them. If you kind of magnify into that, you can see that exceeding that moving average kind of level. And what's really significant about today, we'll go into details, is that not only did we get that, if you look at the intraday, just kind of briefly, you can see that it was a very, very big move, and it started at Chicago time 9 AM, which was 3 PM, because you need to add 6 hours to that in UK time. So 3 PM, Powell's speech at Jackson Hole, which we'll come back to in a second. You can see the price action there. I'll show you these beautiful candles, and there we go. Those are the candles there. Big drop during the speech, so 3 to 4 PM, and then just the bleeding through the day, and all of that move was quite considerably extended through the day, right up to the end of the day. So absolutely no relenting, not a flash in the pan. I thought personally that was going to be just, nothing new said. In fact, he didn't say anything new. this happened. I was already short, so great for me, but I just took a very philosophical approach. But let's look at the chart again. For all these things that I've highlighted, there's a number of things that really make it interesting. If you look at all these other overlays, so we've got in light blue, okay, we've got gold. Now gold has really been underperforming. If you look back some time, you'll see that gold has been underperforming. There's gold there, just following pretty much the fall in the S&P 500. These are the charts. You can see that they all look similar, these line charts, and the purple, okay, that's the yen futures. Again, yen futures, if you invert that, translates into a positive picture for the dollar yen. So the dollar yen has not been, you might have sort of, if you followed John Kicklighter from FreeFX, he talks a lot about the dual capacity that the dollar yen has to express different moves in the market. So dollar yen is obviously a dollar based forex pair, and when the dollar is up, the dollar yen will be up. Also, there's a big differential because the Bank of Japan is one of the few central banks around the world that's really slashing rates or keeping its rate low, not really joining the rest of the banks in the sort of move towards interest rate hikes. So the differential, obviously, which is what allowed the sort of so-called carry trade through 3 years, is getting wider and wider. So the dollar yen is appreciating constantly, making new highs, etc. So so the yen futures are obviously in reverse, so you can see that dropping. It means that actually it's dollar yen going up. So yen futures down, gold down. What is this and this color? This is euro futures. So you can see the euro in orange. There's the euro in orange, and it's been dropping quite considerably. Again, as you know, we got to parity, and we kind of stayed on parity there. Pretty much the 0.99, we're below parity now. So we're between 0.99 and 1. And if you listen to James Stanley, again from FreeFX, he talks about the sort of psychological sales effect where things are priced in 99, so 0.99 instead of $1, and that's because it gives you an impression of being cheaper, which might suggest that there's a bid for euro dollar at this price. It's cheaper than 1, and it might get bought up. Certainly we are at sort of historic lows with euro USDs, descent below parity, so it's kind of worrying. There's been a lot of discussion on Twitter, James Stanley, John Kicklighter, myself and others, about the ECB sort of being so quiet about the situation, not really sending a strong message. Although apparently today they came out saying 75 basis points rate hike will be next, but that hasn't really moved the pair. The dollar is too strong at the moment too. The bank is too far forward in terms of the kind of rhetoric. So the hawks are not on the European side at the moment. It's all about the Fed, the Federal Reserve. So that's the effect on the Euro USD really. Another one is the yellow here. Now you might wonder what the yellow is. It's our lovely Bitcoin. So I'm wearing a t-shirt today, which is the one that says I'd rather be trading, but it's pointing the wrong way because everything is going down. So Bitcoin is definitely down. So if you're a sort of Bitcoin, you might have heard CoffeeZilla. Again, I'll put the link. CoffeeZilla's videos on BitBoy are absolutely fantastic. BitBoy, as you know, has sued somebody who basically called him a fraud, etc. And there's been a court case, etc. So he's basically suing for defamation of and hurting his business, but Twitter sphere and generally social media have taken really badly to this, and basically he's actually kind of shot himself in the foot by doing this. So Bitcoin is down. There's Bitcoin in yellow, and we are 2470. So we are kind of below 21,000 for Bitcoin. So Bitcoin below 21k, Euro USD below parity. It just gets really more and more fun. Yen futures, we got them 0.007, but they're quoted in reverse, so we'll have to look at a dollar yen really. Gold is 1735, so gold is below 1800, and everything's really just bearish. There's no store of value in gold. There's no store of value in Bitcoin. And there's no store of value in S&P or indices. Nasdaq, you can look at that as well. Triple Qs, and they're all pretty much down. So the only store of value at the moment is bonds and the dollar. So it's really not surprising today to see this, finally after August Madness, Triple BY, Bed Bath & Beyond, and, calls for the Fed to step back from its sinful mistakes and pivot, the famous word. Anyway, so lots of memes of Ross from Friends and his sofa carrying up the stairs going pivot, because it did become quite comical at some point. Except today it wasn't comical, it was tragic for some, but anyway, so looking at the indicators there, what we have on the daily, the advanced decline line, as you can see, we had, a lot was made out of this advance from July. But this advance is kind of stalled and reversed since, well, here, kind of middle of August. So the last kind of week or so, we started seeing this decline. And today really pushed this lower. Anyway, that's kind of, there's been a lot of talk about Apple, whether that's going to give way, because Apple has sort of been keeping up. But that's, I don't really know enough about that. So certainly there's this advanced decline line seems to be a bit suspicious when you look at what's happening, but that should change. Hopefully it'll reflect things, but interesting to look at that. RSI has been doing something, which is, it was slightly overbought at around 65, and it's been declining. It's not done any kind of negative divergence. It's really followed price quite closely, and we're down now below the middle line, so we're kind of neutral as going into selling, not oversold yet, so we've got plenty of way to go before it's oversold. And just historically, if you look back, we've been below this level when we were selling sharp in June. The lowest we got was 35. All right, so the next one to look at is my favorite, obviously CCI, Commodity Channel Index, with a 20. I usually put it at 21, but that's okay. It's pretty close. And we've got the 200 there, which, as I mentioned before, we had these three humps, 1, 2, and 3. And I've analyzed the fact that the third hump was pretty much on a par to the second, meaning that there was going to be some divergence here. Then we had the actual divergence from the 29th of July to the 9th of August, but price sort of ignored that and then stalled, climbed a bit more, but this high on the CCI on the 15th of August was lower than the one on the 29th of July. So finally we had this divergence starting here on the 17th of August, okay, which was Wednesday last week, 17th of August, and then we started seeing a decline. Okay, the 17th, if you remember, last Wednesday was the FOMC from last week, meeting minutes. Okay, so nothing was made of it really in terms of bullish or bearish, and then finally this week we started seeing something, and then today. So now with the CCI on the daily, we're actually hitting that level 0, and then we've just come off it. So perfect, we've got plenty of room to go, and this has got plenty of room to go now. So I'm just going to close that there for a sec and minimize, and I'm going to go to my other charts and things. So the this lovely chart here, so the 21 weighted moving average, this is the TradingView chart that I used to keep an eye on other things, the Bollinger Bands first thing, and this 21 weighted moving average that I put on the monthly. Now that would have changed, so this was done at the time when it was sitting at this level, and you know, you can see that we've come close to it and then rejected and further down. This is a weekly, so we had 2 weeks off that level, which also coincided with the 200-day moving average, more or less. It was about 41.37 or something like that, 41.45, and we come off that, and basically that's what we are. Importantly, I'm going to go to the daily just to show you where we are. On the daily, we've got this picture here. We've got the Bollinger Bands expanding outward there and there. The basis, which is the 20 simple moving average, which forms the kind of middle point or mean reversion for the Bollinger Bands in golden yellow there, orange. We just kind of came close to that and then was completely rejected today, and that's taken us all the way down to the lower Bollinger Band, which is started it to expand. Now there's room for that to expand. I kind of show an example here. Back in June we came onto that and then it expanded and further expanded, so there's plenty of scope for that to go further down, or even better if you look at this section. I'm just going to take that off, and we had a lot of pressure on the lower Bollinger Band back in April, which kind of eventually took us down to these lows in May. So not to say that this is, you know, going to do the same, but essentially we have the capacity for that Bollinger Band to flexibly expand, so the 2 standard deviations following price down. Significantly as well, the 21 weighted moving average kind of started coming down and kind of almost crossing below the basis there. Previously we had it crossing below, was back in June, but obviously it's a lagging indicator, so sort of did that slightly later than price crossing. Anyway, so we come basically to resistance to these 2 moving averages. The other significant thing here is that the VIX, that's in purple there, we had a shot at the 24. My notification alert kind of triggered. That was on the 22nd, that was Monday. Then we came a bit lower and then had a new charge, 25.55, ended today. So from these kind of 20 roughly lows, we've come up. Now if you remember, I put a line at 20 and said that the test was going to be whether we come off the 20s, and the other test was going to be whether on the ATR, which you see down here, we were going to come off the 70. And I said before that when we had the previous charge low in January, we were coming off the 70s again, dipped lower and then charged higher, and then we came down exactly to 70 on the second charge in April and went higher. Now again, like in back at the start of the year there, we're dipping below, and this can take you know, a few days to then charge higher. So what we're missing at the moment, we had a big move today and the big volume on futures. What we haven't had responding yet is the ATR, but that will come. So if this kind of continues into next week, it will come and this will dip higher again, and then we'll see the next extended move. That's kind of the plan anyway. For targets, I closed some trades today, stroke this week, and finally, so my target now, my broker's kind of disconnected, but my target is roughly here, around these lows, where you see these wicks back in June when we had a triangle, ascending triangle, and then broke up. So my target is roughly around, was it, I don't want to say it's 38 something, but it's roughly around here anyway, in this zone, you know, sort of between the weekly basis from the Bollinger Bands and the bottom Bollinger Band is about here. So that's my target basically for the final short that I've got on, and that short has been on for a while actually, since I thought it was July, it was actually June I think. I haven't checked anyway. So that's the chart, and that's kind of the philosophy and what I'm seeing, etc. We looked at the futures, but I was going to go on to talk about what happened with Powell today, what happened with the, that was the Jackson Hole Symposium in the US, and, the International Bank of Settlements had a speaker there, and other speeches as well. All eyes in terms of trading and investing were very much on the Fed chair, Jerome Powell. And now, if you remember that before today, in fact, in my last video, which was Monday, these two were not so clear towards favoring 75 basis points hike at the next Fed meeting, FOMC meeting. In fact, if I mentioned before, this has become very unreliable, because for the next meeting, we've had anything for the 75 basis points ranging 38%, we had 60%, we had 50%, now it's back up to 61.5%. It keeps going up and down, which kind of gives you an idea of the tensions and moods and sort of really noise that we've had from all sorts of sources. Okay, so that's what they're pricing in. It would be interesting to see what the one after would be. So if that takes us from 225 to 300, the next one in November, from 300 to 350, 275. So for the November one now, interestingly, because that was different before, for the November one, the 75 basis points has been priced at 54.9%. So the highest bidder, okay, so that's changed again. Okay, so just to make you aware, if you want to know when the FOMC meetings are, go to federalreserve.gov. There's the page there, the URL, and on the calendar, you can filter it by board meetings, testimony speeches, etc. FOMC meetings ticked, and that's all you're going to see. And the next one is going to be 20th and 21st September. There's going to be a press conference as well. And the following one is going to be the October. That's just the FOMC minutes. And then in November one, which is said possibly another 75 basis points according to the FedWatch Tool, is also going to have a press conference. Okay. Now, let's talk about briefly next week, just because we talked about the calendar. So, and next week we have this. Okay. So we start with some Fed speakers. There's Brainard. She's going to speak at on Monday evening, 7:15, and then Tuesday there's going to be job openings, high impact event, more speeches. Williams is going to speak. We have Barkin, other Fed speakers through the week. Loretta Mester is going to speak on Wednesday. ADP employment change, which is sort of like a precursor to the Friday event. And that's the non-farm payrolls data. We've got a consensus of 313K, previous was 471K, and the actual, we have to sort of see what happens with that. Unemployment rate, expecting 3.5, was 3.5, so no change expected. So anyway, that's a week. Thursday, jobless claims, again, ISM manufacturing PMI. So really, most of the week is going to be expectation of the non-farm payrolls, which leads nicely into this. Let me go and check the New York Stock Exchange holidays as a proxy for US financial markets holidays. And for 2022, we know it's 5th of September, that's Monday, Labor Day in the US. And so that means that the non-farm payrolls heralds a long weekend with the Monday included. So any kind of side effect to that will not be felt until Tuesday. Or if you're trading the spot S&P like myself, SPX, it'll be Monday night from 10:30 UK time. Right, so that's basically when we'll see any effect or late effects of non-farm payrolls at the start of the following week. So, and that takes us closer and closer to the FOMC meeting, obviously. Now, just wanted to mention a few things about the Powell speech today. So we knew that there was going to be this event, Jackson Hole, and all eyes were on the Fed chair. And he said, so I'm quoting this from the Financial Times from today. There's a picture of Brainard, Williams, and Powell. That's the real deal, as in that's not a fake backdrop. It's just the actual landscape over there. And so the Fed chair said that reducing inflation will probably result in lower economic growth for a sustained period. But to do that, interest rates would need to stay at a level that restrains growth for some time. And then he declared the Federal Reserve must keep at it until the job is done. He used the speech at Jackson Hole to deliver his most hawkish message to date. Okay, now so that's the kind of what we had. And the US stocks suffered the biggest drawdown since June. Performance on 26th of August. Powell begins his speech. That's kind of minute by minute sort of reaction. We are taking rapid steps to moderate demand so that it comes into better alignment with supply and to keep inflation expectations anchored. Interesting, the sort of a lot has been made of, and there's a quote here that he, Volcker famously said that the cautious approach, the approach in the 70s that the Federal Reserve had with the rampant inflation of sort of raising rates and then sort of holding that hiking regime and then trying to chase inflation was counterproductive. So the lessons of the 70s, the bank presided over a period of turmoil and they failed to rein in inflation. And so best to kind of keep that regime of rate hikes. And interesting, there's been a lot made of the measures that Biden has put in, the US administration, to reduce, for example, student debt by essentially extending the or sort of essentially lifting the burden of loan repayments this time round, $10,000, etc. So whether that will have an inflationary effect, because the money that's not being paid essentially will de facto be spent on other things. So, but it's hard to measure that really. Anyway, this is a comment that I heard on Twitter. Speaking of Powell, here's a fantastic Seeking Alpha, and there's an article here by MOTT Capital Management, and the article here is Powell's Jackson Hole speech delivers a fatal blow to markets. Now, there's a really good quote here that I'd like to... So the futures knew it, the bonds knew it, and the dollar knew it. Once again, the only market living on an alternate planet was equities, which proves that paying attention to the landscape around you matters. In essence, the equity market has been living in the past, believing that the Fed would pivot and ease policy just as it's done every time the market fell. Over the past 12 years, this is important, the Fed didn't have to deal with inflation running at high rates. In the past, inflation was running too low and on the cusp of deflation. If you remember, the ECB with Draghi and Bernanke and then Yellen were really hammering in the message that the central banks would want to take inflation up to 2%, up or close to 2%. That was a message repeated. I remember Bernanke saying it, Yellen saying it, and Draghi saying constantly the 2% mantra because inflation was too low. Okay, and they were trying to kind of stimulate the economy by putting liquidity out into the system and sort of creating credit, etc., to increase spending, and so increasing demand essentially. So all that money to the system, if you read Mises.org and if you read lots of commentary, has created the problem. Essentially, finally, the inflation is partially a result of that. So unfortunately, we are the Fed is having to deal with past mistakes in a way. That's the argument. But so interesting, this chart about expectations of Fed fund futures going forward. You can see that's the 23, 24 and 25. So well into 2023, we're expecting the overall kind of target of all the rate hikes to be about 4% or close to 4%, and that curve is actually evened out. So instead of dropping sharply, we've got a sort of slightly higher, and you can see that the 26th of July Fed funds curve, which is the blue, was much lower and dipping sharper, and the latest one that we have, which is the orange, has gone higher, so sharper up and declining later. So we are basically not expecting rates to ease or hike regime to ease well into 2023. In fact, that's September there. So basically for most of 2023 we can expect rate hikes to stay buoyant, shall we say. Okay, so this article is very interesting as well, because what we have is the dollar pushing higher. That's the chart. And this very interesting, there's a spread between the S&P 500 earnings yield and the 10-year treasury, and it's collapsed to 2.4%. The only other time the spread has been this low on a rate adjusted basis was in the fall, so in the autumn of 2018, and no other time over the past 12 years. So that means that if the spread were to return to around 3%, the price earning ratio would be of about 16.6, with the S&P 500 earnings estimates of $226.60. The index would be worth about 3750. What that means is that the index is highly overvalued for what it's actually delivering in terms of yield. So there's quite a bit more to go to the downside, I'm afraid to say. Now, speaking of the speech today, if you follow John Kicklighter, as I said, on Twitter, there's a tweet there today where, and I think I saw that from another source, Bianco Research, and so that Powell's speech delivered a reference to inflation about 48 times, and so that's interesting per se, because it gives the message that that's the prime focus of the monetary policy, is to fight inflation rather than worrying about stocks, financial markets. That was zero mentions. So that gives you the sense of priorities. And also there was a really interesting Spaces, which is a stream on Twitter by Wolf Financial. If you want to follow him, Wolf Financial is I believe the tweet. Get back. Okay, so just to say that their handle is @wolf_financial, and Friday Spaces is this one is Wall Street Women, pretty much, channel by women who trade a variety of things, stocks, options, and indices, etc. So we've got all the main protagonists. Kim, Angie, Rosanna was speaking as well, who mentioned the Bianco Research as well, about the Fed speech. Sort of a number of times inflation was mentioned in that one. I think it was 47. So very interesting one there. We've got Sniper Sim, Vegas, and other ones, I think Mish as well. So follow that one if you want. There's a recording available there, so you can have a listen to it from today. And that is all. I'm going to mention one final thing, which is the options heat map. I've shown you this before. Again, it's on the CME group, if you go and type CME group open interest options heat map, you'll get to this safely and select your product, and you'll see here you've got different products and financials, takes to even the S&P. Now I mentioned this before, I think we were about 4310 before sort of this kind of week where we dropped considerably. I think it was 4310 with a big rise in bids. So these are the September contracts, ESU, and these will be the next lot of contracts. And so if I go back to here, you see your codes there. So ESZ is the December, so this is the December's here. Okay, now I seem to remember the December contracts, the puts around 4310 had increased significantly, so that was the open interest change in percentage. Now that obviously those prices is sort of, it's off the scale right now because we dropped much lower, so can't see them anymore. There've not been a lot of puts on either side of current price. Current price, just to remind you, we are at 4042, and currently 4042 will take us to, again, just have to go further up, maybe see if it takes me 4042. So let's see, maybe here we go. Actually, I just had to scroll up. So big. You can see, just if you don't know what big looks like for options, just have a look around and all the other numbers in terms of change, percentage change. You can see there's nothing in the 3 digits until we get to 4035. Massive puts and actually massive calls, but that's for the current contracts. Okay, so expiring end of September, so we've got a bit more time. But even so, we have a stalemate between the calls and the puts. 175 increase on the calls and 173 increase on the puts. I wasn't expecting that. That's interesting. I just found that out now because I scrolled up onto those prices. So what that means is that there's an equal amount of 4035, which is just below where we are. 4035. Let's have a look at 403. What does that actually take us? If I put it onto a daily, just have a better look at that. 4035 will take us roughly here. Okay, which is just below where we are. So, and what's happening there? If you look back, 4035, it's just 4035 is just yeah. I mean, I don't see anything particular kind of importance at 4035 of, you know, in recent memory. We've had this level here broken in June, but you know, I don't think that's particularly important. From a daily, obviously the Bollinger Band is just here where we are now, so if we drop below that, but I don't think there's a Bollinger Band consideration in these sort of groupings or in these clusters of options. So it might be to do with you know, just option pricing. That's my guess, but anyway, just wanted to show you that because that's an interesting consideration. And I'm just going to finish there to say thank you very much for following this channel. I'm going to have another video on Monday. Of course, it's going to be the Monday after the Powell speech, and it's going to be interesting to see how the S&P opens and closes, and on the day, and what happens considering what we've had today, the volume we've had, you know, more volume next week potentially as we come out of the sort of summer period where things are a little bit unusual in terms of trending and consistency. And so that's going to be a really interesting one today. I hope you enjoyed today's video. Sorry, very long, but there's a lot to cover, which I hope you found interesting. And please like, comment, share, all the rest of it, and subscribe. And I'll see you in my next video. Thanks very much, and good luck trading. I hope you had a great trading week. Take care.